the United States of America has taken the most serious step of Donald Trump's second presidential term. On Wednesday, October 22, 2025, the White House officially announced new sanctions against two of Russia's largest oil companies, Rosneft and Lukoil. These companies are not just elements of the Russian energy sector, they are the backbone of the Russian Federation's budget. According to both official and independent estimates, oil and gas revenues account for around 30% of Russia's state budget. And without this income, Moscow's economy comes under severe pressure. In a statement from the U.S. Department of the Treasury, it was emphasized that today's measures target Russia's energy sector and reduce the Kremlin's to fund its military budget. Analysts from the Atlantic Council note that the action is aimed not only at the two companies, but at the entire chain of Russia's oil and gas exports, from extraction to refining and transportation. The essence of the sanctions is a ban on American persons engaging in transactions with Rosneft and Lukoil, the freezing of their assets in the United States, and the threat of secondary sanctions on any foreign banks and traders that continue to work with them. For Russia, this means that while previous sanctions targeted specific projects, the current blow strikes at the core of its energy economy. As Russian President Vladimir Putin stated in an interview, the measure is serious and will have consequences, but he also declared that Russia will not change its course under pressure. In Washington and among U.S. allies, this move is seen as a long-awaited step. Former State Department official Edward Fishman called it significant. However, everything now depends on whether the secondary sanctions will actually work and how effectively the flow of oil to buyer countries, especially in Asia, can be cut off. According to experts from the Atlantic Council, the outcome will depend on whether India and China revise their purchases. At this point, two key geopolitical players, India and China, enter the complex chess game. Both countries have been among the largest buyers of Russian oil, cheap, accessible, and logistically convenient. Losing these supplies would be a serious challenge, but complying with U.S. sanctions and abandoning their previous arrangements would mean defying the White House and Donald Trump himself, creating serious political tension. According to insider information from Moscow, Putin has reached out to India and China, proposing that they unite and publicly demonstrate BRICS solidarity. He reportedly offered a discount of up to $15 per barrel of Russian oil from the current price, and simultaneously discussed with ministers the possibility of restricting oil exports from the United States as a countermeasure. The time for unity has come, Putin's proposal stated. Our goal is to challenge U.S. hegemony and the dollar itself. The ruble, yuan, and rupee must become the main currencies of a new multipolar world. However, India and China are not rushing to accept these offers. Despite the attractive discount and favorable partnership terms, they remain extremely cautious. Losing Western markets and triggering a direct confrontation with the United States for the sake of cheap oil is a risk too great to take. Moreover, according to sources, Indian and Chinese companies have already begun internal audits to determine whether their purchases fall under the U.S. secondary sanctions ban. Analysts note that if the level of purchases remains unchanged, the impact of the sanctions will be minimal. For Russia and for Putin personally, a moment of truth has arrived. There are two paths ahead. The first is to end the war in Ukraine, make concessions, and thereby reduce Western pressure. The second is to continue escalation, unite BRICS allies, and mount a serious challenge to the United States. Judging by the Kremlin's actions and Putin's statements, Russia has chosen the second path. If the U.S. move succeeds, if India and China even partially cut back on Russian oil, if secondary sanctions take effect, and if Russia's oil economy is seriously undermined, this could become a turning point. If buyers bypass the sanctions and Russia compensates for its oil losses through new schemes, the consequences will be less dramatic. In Washington, officials note that the United States is not simply increasing pressure, but betting on reshaping the global architecture of the energy market and financial flows. In an official statement from the U.S. Department of the Treasury, it was said that lasting peace depends only on Russia's willingness to act in good faith. Meanwhile, global markets have already reacted. Oil prices rose sharply after the announcement, and Russian stock indices fell. In Beijing, the Chinese government issued a harsh statement, calling the sanctions unfounded and a violation of international law, underscoring the risk of a split in the global system. We are therefore standing on the threshold of a new phase of geopolitical struggle. Energy, finance, sanctions, and buyers are all intertwined. The United States has taken perhaps the most serious step of Trump's second term. Russia has responded with an appeal to India and China, and markets and governments are preparing for a potential global shift. If Russia loses this game, its budget will collapse, its debt burden will rise, and its domestic politics will become unstable. If it wins, the ruble, yuan, and rupee could genuinely strengthen their positions. The dollar could lose part of its global influence, and BRICS could emerge as a serious alternative center. Yet the consequences of Trump's decision are already being felt not only in Moscow, but far beyond. According to Bloomberg, within the first 24 hours after the announcement of the sanctions, more than 15 international traders suspended transactions with Russian oil, fearing secondary restrictions. Several tankers departing from the ports of Primorsk and Novorossiysk were forced to turn around in open waters. No insurance company is willing to guarantee coverage for such voyages anymore. London brokers call it the most sudden collapse of confidence in Russian oil since the 1980s. Meanwhile, Europe and Asia are witnessing a sharp rise in energy prices. Germany, France, and Italy, which had previously advocated a gradual move away from Russian resources, are now concerned about a possible surge in inflation. According to the Financial Times, European energy ministers held an emergency meeting in Brussels to discuss a market stabilization mechanism and the creation of a joint oil purchasing fund with the Arabian monarchies. Chinese CCTV aired a sharp evening segment calling the US sanctions an act of economic blackmail and warning that disrupting the energy balance could harm the entire world. The message was clear. Beijing is using the crisis to demonstrate that the dollar-based system is unstable. Meanwhile, the mood in Washington is triumphant. But in private conversations, according to Politico citing White House advisors, Trump himself understands that if China and India do not join in, the effect may be short-lived. And that is precisely what turns the current moment into a geopolitical trap. Washington has staked nearly all its diplomatic capital, while Moscow has put its financial stability on the line. If one side falters, the other will strengthen its position. Experts from the Brookings Institution write that this conflict is no longer about territories or politics. It is about who will control the economic order of the 21st century. For now, the situation hangs on a knife's edge. Russia promises new measures, Trump new sanctions packages. The stock markets are in panic, Brussels is holding emergency meetings, and Beijing remains silent and calculating. The world seems to be holding its breath, waiting to see who will make the next move.